Hello everyone! In this video we will discuss the cryptocurrency market, where we will take a look at the Bitcoin and Bitcoin dominance, discuss the main news highlights, and share a success story from one of our users. We hope you will enjoy the video. Let's get started. At the time of recording, Bitcoin has reached 63,000 zone. We are currently witnessing a breakout from a narrow range that we have been stuck since the August 8th. It's important to watch if Bitcoin has held about 63,000 mark on the daily or preferably on the weekly candle. The main trigger of Bitcoin's local growth was the Federal Reserve's key interest rate cut on the September 18th. Where the rate was reduced by 0.5%. The nearest resistance zone where the Bitcoin is already reaching to decline is 63,000. The upper boundary of the resistance is at 65,000, where Bitcoin previously tested the level, but the sellers proved stronger. Regarding Bitcoin dominance, we continue to see new heights. At the time of recording, Bitcoin accounts of 58.6% of all liquidity in the cryptocurrency market. As a result, only selected altcoins are receiving good reactions, even after Bitcoin rise. It's critical to be cautious when entering position right now, because any decline in Bitcoin with this level of dominance could lead a significant correction in altcoins. Next, we will discuss the major events of the past few years, specifically the Federal Reserve's rate cut. Before discussing the Fed's position, it's important to note that the long term, the rate cut will be positive for the markets. We have entered a phase of a monetary policy easing, which is good signal in itself. However, in the short term, the situation is ambitious. Previously, 87% of investors expected 25 BPS rate cut, but by the time of the Fed's meeting, 67% were already predicting a 50 BPS cut, which is exactly what happened. This has left the market with the mixed feelings, as there were hopes that Feds wouldn't follow the majority's expectations. One of the reasons for the sharp rate cut may be an attempt to minimize risk ahead of the election campaigns. However, there are concerns that such drastic reduction could trigger a recession. The next month and a half will be decisive. If inflation rises again, coupled with the weakening job market, it could be said that Fed has taken a wrong course. This in turn could lead a liquidity outflow, negatively affecting stocks and other risky assets. Let's move on the key points from Jeremy Powell's speech. Cooling of the labor market after overheating. Powell confirmed that US labor markets has indeed past the overheating phase and showing signals of stabilization. This means that labor market no longer requires such aggressive rate hikes as before. However, the Fed remains ready to intervene if the dynamics change. The US economy remains strong. Despite the recent fluctuations, Powell noted that the US economy is generally showing resilience. This was one of the key factors that allowed the Fed to make the decision to cut rates. Inflation has decreased, but still far from the target. Although US inflation has slowed, it still exceeds the target level of 2%. That indicates that the Fed remains concerned about inflationary risks, easing inflationary risks, and increasing risks of a weakened labor market. Powell mentioned that the Fed sees the reduction in inflationary risks, but the risks of weakened employment have now become more relevant. The criteria of balance of future decisions. The Fed will closely monitor the developments and adjust its policy based on economic trends. This creates a balance of the future decisions. The Fed will closely monitor developments and adjust its policy based on the economic trends. A sharp 50 bps rate cut. While the rate cut seems significant, Powell stressed that it does not indicate haste or a delayed decision. On the contrary, the 50 bps cut is supported by the expert concerns and reflects the Fed confidence in controlling the situation. The sharp reduction is indeed to support the labor markets to prevent its weakening. To summarize the coming months, there is a risk to decline in US stocks and bonds if we rise in inflation and weaken labor market. This could suggest that Fed's taking the aggressive course in cutting rates, so it's definitely not time to relax. While the current situation is positive, risks still remain. One of our subscribers shared the trading strategy that earned him 13x profit in just 4 days. By analyzing the recently popular political meme industry, the user focused on the assets related to the Donald Trump, realizing that the election race could act as growth catalyst for such instruments. Our subscriber researched a new token called Bomb Trump. According to the developers, it combines the cultures of Bomb and Trump tokens, which had previously shown good performance. To support his investment decision, our subscriber used an on-chain tool, a wallet search by filters. The arbitrage scanner wallet search service allows you to instantly find wallets based on their search parameters. Using it, you can locate addresses of the smart traders, market makers, and other influential market participants. More details can be found in the tutorial video pinned in the comments. On the September 12th, while conducting his analysis, the subscriber searched for wallets that were buying the asset. After filling the filter fields for smart contract address, time range, and minimum transaction volume, the user found a wallet that had significant profits since the first transaction. The address labels indicated that the wallet was among the early buyers of the several coins. By studying the portfolio token interaction history, it became clear that the wallet successfully traded memes. On that day, our subscriber noticed the purchase of Bomb Trump and followed the wallet's action. 4 days later, the user captured an impressive 1,300% profit. The buy and the sell points are indicated on the chart. Interestingly, the asset's subsequent movement briefly exceeded our subscriber's sell point. However, there is no need to feel regret or FOMO. Even the asset shows the future impulses after your sale. Such movements in cryptocurrency are neither the first nor the last. Remember, the one who locked in profits is the one who earned. You can be greedy and end up with nothing, or you can make profit by sticking to your trading strategy. So, in this video we reviewed Bitcoin and Bitcoin dominance on the chart, discussed the main news highlights, and shared with the success story of our subscriber. Please be conscious when using any tools for trading and investing, and always manage your risks. To support our viewers, we hold in a contest with a simple condition. Write the abbreviation of the Federal Reserve System in English in the comments. The first 5 comments will be the winners. If you have a subscription, we will give you additional 3 days on your current plan. If you don't have a subscription yet, we will gift you 2 trial days instead of 1. That's all for now. Use the best on-chain analysis tools from Arbitrage Scanner, and see you next time. Bye!